my friends. Chris Marcus here with you on behalf of Arcade Economics today. It is Thursday, October 19th. Hope you're having a great day out there. Today we have a quick video about the Dow hitting another milestone, although there actually are some signs of caution looming. We'll dig into that. Although perhaps for our longtime viewers, as you can see, we've upgraded the technology. So rather than just me in front of a white wall for a change, using Zoom here today, and we can see my screen, and I think we'll be doing a lot more of this, because what I feel is helpful is there's so many of these headlines that come out, and really how to interpret that, what can you take away from them, how can you read the news, grasp what you need to get to understand what's really going on, and translate some of these. So we'll see how this goes, but excited with my new gadget here. Anyway, into today's video, as you can see, the Dow has hit another milestone. What is the milestone that it hit? It was powered past 23,000 on Wednesday. So stocks in the US continue to rise, although what's interesting that they're mentioning here, so you can see investors pulled roughly a net $36 billion out of US mutual and exchange traded funds in the third quarter. That's according to EPFR Global, who I'm not too familiar with. So again, without being able to speak to the accuracy or the veracity of the data, again, and certainly over the short term, you don't want to go reading too far into these things. But what I think it's instructive, though, is that certainly whether this is a sign that people are starting to leave the stock market, or if that's still yet to happen, this is symptomatic of what I don't think I would say, I don't think I'd call it a possibility at some point, but more appropriately, a probability. Because at some point, that's what happens with bubbles. If you scroll down a little farther here, many investors are concerned that the steady rise in U.S. indices left shares looking expensive. I would agree with that part. They also recently have grappled with elevated tensions between U.S. and North Korea. Again, would agree with that. Hurricane-related disruptions. Certainly that's, and it's unfortunate, the news I hear out of Puerto Rico, where I hear more, it certainly seems like really affected. And if the government's going to send money down there, I mean, you would assume that's going to be printed money on some hand. Where else would it come from otherwise? And then lastly here, in terms of perhaps explaining the net outflows, mentions that the Federal Reserve is planning to raise interest rates further and wind down its unprecedented asset purchase program. Well, certainly that's what they say they're planning. Whether they will actually do that or not, we are 10 years later. So far, it hasn't happened. Yet still, what you see the Wall Street Journal saying here, again, it's that same theme, that if the Fed actually did raise interest rates and stop buying securities, well, certainly you would expect to see money fly out of the stock market, fly out of a lot of these markets that have been propped up on easy money. So something to keep an eye on. Are we at that point? It's a little bit hard to say. It's always a little bit tricky to say when you have a bubble, when is it going to finally collapse and implode? Although, again, just an interesting story where you can see whether this is the beginning or not. Certainly something that you're going to expect in greater form at some point in time. So with that said, leave any thoughts or comments below. And as always, thanks for watching, and we will see you again tomorrow.